Welcome to TMS Insights. We're in the middle of reporting season. August is a busy time, Ben, so let's get right into the news of the day. Now, let's talk macro first too. Today, being Thursday, was a big selling day in the market. The market was down pretty heavily throughout, about 180 points, and it has pulled back. We've seen some volatility creep in. We know what the big reasons are: concerns about global growth, trade war concerns. Ben, bond yields have really pulled back a long way. We've seen our 10-year under 90 basis points, and we're expecting further interest rate cuts. But it does, while it's got a good element to it, it's got a worrying element in terms of what it's saying about growth.
Absolutely. And we've been talking a lot about bond markets, which is kind of unusual, but what is going on in bond markets is fairly historic. And you're right, Jeremy, the bond market is, on a positive note, is indicating that interest rates right around the world are going to be ultra low for a very long period of time, which will over time push a lot more money into equities. But the reason why bond yields are trading at these levels is the bond market is concerned about economic growth and what they're seeing out there. So, the latest sort of issues are, of course, the longer this trade war drags on, we're seeing more and more US-based companies saying it's starting to have an impact, it's starting to slow us down. And the worry is that filters out into the real economy, and you see America go into a recession. And really that's, I think, a less than 50% chance at this stage, but it's going to be a case of, how much worse and longer do Trump and China let this continue on for? Because actually, through reporting season, the companies that we've listened to that are US-based have broadly said the US economy is in great shape at the moment. It actually looks quite strong. The concern is where we are in 18 months' time from now.
And that's what we have to keep an eye on. But let's move into reporting season and it will puzzle some people who get the front page of the paper or the nightly news worrying them about equity markets. The reporting news has been good, Ben. Overall, it's only halfway into it, really, but it's looking good. We've had some really quite good numbers overall.
Yeah, I would say, pleasingly, a lot of the better quality companies have shown an ability to continue to grow in good or bad environments. There have been some poorer results, but expectations were low coming into this result season.
That's true.
I think a lot of companies have surpassed.
So last Wednesday really kicked it off.
Yeah.
CommBank was the big one there. The result wasn't really overall great. Nobody had high expectations.
Yeah.
And it's confirmed what we said about banks overall, that they're unexciting at the moment.
Yeah, and facing still several challenges, the newest of which is the ultra-low interest rates. CBA, one fact that Matt Common pulled out was that they have $160 billion of cash on deposit, which if there is another RBA cut, they will not be able to pass on that cut to the savers because they're currently paying zero interest on those accounts. So the margins could continue to come under pressure if we see continued cuts from the RBA.
Yeah. And NAB gave a quarterly update, which looked a little bit better actually overall, and it's probably our preferred big bank. Transurban numbers generally don't focus on their profit numbers, but a capital raising which will help the balance sheet, help them buy a bit more of WestConnex, and also a share purchase plan there, Ben.
Yeah, so, this one's been done actually. It's getting very close to the share price. So $14.70. It's a $15,000 share purchase plan. Worth remembering, it'll be done at a 2% discount if the price does drop below that $14.70. So it'll still probably be a good one to take up, I'd imagine, in this low rate environment.
And these are the kinds of stocks, if we, look at what we're after, strong long maturity assets, pay
good
a nice
yields.
dividend.
Yeah.
That's what the security of the market will deal with. And in fact, they look better in a low interest rate environment.
Absolutely. And you could argue I think the 10-year bond yield has fallen so rapidly, you could argue that the share prices should be trading a fair bit higher if this is the sustainable level that yields settle at.
And that's always the case, to know where it settles. And we might jump into a similar stock, Sydney Airport, whose numbers were out today. And again, parts of it weren't remarkable, but again, it's more attractive because of the environment.
Definitely. The point I'd make with this one is that Sydney Airport typically has offered a yield about 3% above the 10-year bond yield, and it's currently offering a yield about 4.3% over. So again, I would say that the share price of Sydney Airport should probably be a bit higher. It's probably one of the best quality infrastructure assets you could own. along with Transurban, I'd say, and Auckland Airport.
Yeah.
And, I think this is a really good buy at the moment.
Because it has pulled back a bit too, that's right. So we're about 8-10 on that stock at the moment, which is good. So that's Sydney Airport. REA Group's a real favourite of ours. It reported last Friday. Ben, it was bizarre. It was sold before the result, sold straight after the result. We love the result.
Yeah.
And it turned around remarkably on that day. So, again, selling down a little bit today, but still pretty much just above $100. What an outstanding stock.
Yeah. I mean, when the CEO of this company said, this was probably, for the factors outside of our control, it's probably the worst we've had since we floated in 1999. The conditions. Listings in Sydney were down 18%, in Melbourne down 13%, 3 elections in the 6 months. And they still managed to grow their profits despite all of that. And a point I'd just get across to clients who might be interested in, the outlook on the property market is Owen Houston is a pretty conservative guy and doesn't beat his chest too much. In the decade we've been listening to him, was the most bullish I've heard him on property probably ever.
Yeah.
And he said the inquiry volumes they're getting through the realestate.com portal in July were the highest in the company's history. So and
that'll correlate into sales and revenue and profit. Track. So that's really good news. It's for the broader economy as well.
Absolutely. So, there's a turn coming in property, 100%.
That's right, and which will be the economy potentially too. So that's good to know, because it does flow through to Ben some other news on company specific issues that we can take reads on the economy from. Now, JB Hi-Fi, not necessarily the stock we own, and Super Cheap Retail, which is another one that we don't own but we listen to, both had really good numbers.
Yeah, incredible. And despite the Amazon massive scare we saw a year or two ago, where everyone thought these companies would be decimated, quite impressive growth from both these. The thing it highlighted to me is there's been some really poor results in retail so far, and there's been 2 crackers. Yeah. And I'm sure Premier Investments, Solly Lou's company, will have a good one as well. And you just want to be in the company who's got the best operators, and probably in retail's even more important. Harvey Norman's nearly at a 3-year high. So it's always worth bearing in mind. You want to be in the best of the best, because even in bad environments, they can keep finding ways to grow.
Great advice indeed. Horizon's a stock that, again, we listen to but don't necessarily own, but good news. That's the old Pacific National. So some really good turnaround in their numbers.
Really good. I think that this has had a lot of issues with regulators and with their customers. These guys own the below and above ground rail business up in around the country, and it's probably one we've now put on our list to do some more work on post reporting season, because it does have a lot of the attributes that we look for. Monopoly, great yield. It's got, I think, a good management team, and that's definitely one keeping an eye on. And there's been a couple of others we've been listening into, which I thought have prompted to do work. Tabcorp was one. Right. And, the lotteries business in Tabcorp just had a phenomenal year. There's been some changes in how these things can jackpot. It's a $120 million Oz Lotto coming up this month. The lotteries division had 30% growth.
Got a ticket?
I haven't. Okay. Maybe I should. The way the market's going.
Star Group in the casinos operation as well. That one looking pretty appealing.
Yep.
Good, consistent revenues, good income.
Yeah.
From
so it's another one we want to. I think they report tomorrow.
Yeah, that's right.
It's definitely creeping up on the register, because it looks like it's on a yield of about 9%, which is pretty attractive for a pretty defensive business.
Now, one we do certainly have talked about here is Challenger, and we did get a couple of profit warnings through the last year.
Yeah.
And this result was okay given what we knew about it.
Yeah, I think this sort of kind of similar to REA, where they've had a lot of things out of their control which have really gone against them in the last 12 months. But the business has proven to be quite resilient. The profit only fell about $1 million versus the year ago. Look, I think with this one, there's 2 things. The first is there are still the let up in advisors leaving the industry and moving firms has not slowed.
Yeah.
That's still happening, and that is still an issue for Challenger, and I think it will be for most of this year. The second thing is, with bond yields getting to where they are, the company is adamant that it won't affect the demand for annuities. I think the market is less certain on that.
I think they are definitely concerned about
Analysts have got concerns. Richard Howes has sort of pointed out that interest rates have been falling for the last decade, and their annuity sales have risen 10 times during that period. But it's just at this pointy end sort of how much of an impact will it have. They believe they can keep making 120 basis point margin on annuities. I think there's some, there's some people who aren't sure about that.
Yeah.
But on face value, the result was pretty good.
Okay, we'll move through a few quickly.
Yep.
Magellan has run very hard, great result.
Yep.
We did highlight it was getting a bit pricey and it's pulled back a bit, even though the result was excellent.
Yeah, this is one of the best results. Ironically, I think we saw the stocks dropped about 13% in the last few days, namely because Hamish Douglas launched a capital raising. I wouldn't have wanted to be buying those shares off Hamish Douglas.
No, he's too smart to be buying them from.
He's got a better idea of what that business is worth.
CSL, outstanding again.
Yes.
Rallied enormously, Ben. We talked a lot about that in the past. People know we like that.
And stick with it.
ASX we don't own, and Treasury Wine is another one that reported well. ASX great.
Yep.
Treasury Wine's a very good, man.
They had a great result today, and this is one that's been very divisive in the market. There's some real supporters. There's some very big short interest. When we were in America, the Sohn conference was singled out as a key short. Michael Clark seems to be continuing to do a great job. Not the cricketer.
No, not the cricketer.
The CEO.
And just finally, Blackmore's disappointing.
Yep.
That wasn't a good set of numbers. It's had a tough year, and we're listening in there. But Invacare, a very good result actually. Its share price has been strong, so it was sold off today on the Monday. So, what do you make of those two?
Well, I think with Blackmore's, they've had a really horrible year. There was a mea culpa at the start of the call that this was not a result they were proud of, and they have a real plan to turn it around. They're going to take a lot of cost out of the business in the next 3 years. They're going to push through a price increase in October, which will be the first in 3 years. And their other Asia ex-China sales are really growing rapidly. Yeah. And I think there's some real optimism in the company about this medicinal cannabis products that they're going to be releasing, which I think with a Blackmore's label around them, could be. We're seeing what's happening in offshore markets with this area. It's completely gone berserk. So,
and at the other end of the scale, Invacare, normalisation of the death rate was good for them. But, But again, share price just probably got a bit lofty. So
I didn't see anything in that result that was
a good
poor.
Result. Yeah.
I just think the share price might have run a bit too hard going into it. It is a stock that's very volatile.
Strangely,
weirdly. Yeah. They're launching a pets cremation business, so that's a new sort of a new vertical for them. So we'll see how that goes.
Something to keep our eye on there. Yeah. So, all right, that's all we've got time for in this review. We'll be back with another Insights next week with more reporting news.